In recent months, Chinese economic data has been quite poor. So what's happened, and why hasn't China recovered as COVID restrictions have been lifted?
COVID served as a very convenient foil because it was by far the biggest drag on growth last year. I think that really masked a lot of underlying structural problems that had been accumulating over the last decade. And in real estate, markets in major cities in China have been bubbly for quite some time. A couple of years ago, policymakers started taking much harsher measures to constrain credit to developers, which have worked all too well in reality. So today, over 2/3 of private developers haven't been able to service their debt, and those are basically in runoff mode. And that's had a pretty big impact, not only on adjacent sectors like construction or materials, but also on broader consumer confidence, because as you may know, real estate is the biggest asset that most households own. The most visible and direct impact has been in consumption, where you've seen a lot of down trading. So consumers are still buying a lot of the cheapest stuff and a lot of the priciest stuff because those buyers still have good jobs, but the middle is getting hollowed out.
Andrew, anything you'd add to that?
I think one key thing to keep in mind in China is that official economic statistics aren't really trustworthy. They haven't been. So I think as international investors, what we're focusing on more is the results of companies, because they're coming out roughly as quickly as economic statistics. And there, I would say that most of the companies that we follow are producing sales growth and profit growth in China. But we do know of some companies that are feeling a bit of a pinch, particularly going into the second quarter.